Here's a good example of the S&P along for the ride action that I talked about in the last week or two. So today is a potential for an S&P along for the ride uptrade. Last Friday, ES closed at 39 for 39.75-ish. And at 10 o'clock this morning, it was at 40.14, so up about 38 points or so on the S&P. So that has the potential of a S&P long for the ride uptrade. But that time frame of 10 to 10:10 can also be, and in this case, the high of the day, and you just don't. So that's why we added that additional 10 minutes, because we've seen that over the years where you get action like this where you have a big up day at 10 o'clock, up 38 points or whatever, and then the next 10 minutes it just keeps going, but that's the end of it. So that's why we had the 10-10. So this is actually the 10-10 bar. So the high of the day, I think, is around 10:09. But the difference between the 10 o'clock price, which is about 40.14, and the high of the day, which is about 40.24, is 10 points, right? So it's a win or loss based on the 10 a.m. price, which would be here at 40.14. But in order for it actually be an official trade, it needs to confirm it, which would be after 10:10. You need to take out whatever the high was, right? So the high could have been at 9:30, say, and the market came down here. It's still, say, up 38 points, for example. At 10 o'clock, it would have to break those highs, which were the open, if that was the case. But this is the reason we use that extra 10 minutes. It's very important. It keeps you out of a lot of bad trades. This one would, if you just bought it right here, you'd be down 25 points or so. But officially, it's not a official S&P long for the ride trade until it breaks that time frame. And it was just a nice example today of the timing of that. It just perfectly worked out. This is the 10-10. There's a 1 minute chart. There's a 10-10 bar, which means that's 10:09 and some odd seconds. And you can see it topped out there and then went down. So keep that in mind as you're trading. We talked about the quick spikes below as well. Those are things to watch out for. But these are good signs to look for. And again, if you were thinking the opposite way, and you want to be, you're thinking, hey, it had nothing to do with the S&P long for the ride, but you know that the S&P long for the ride can have a high, in that 10-10 or 10 o'clock to 10-10 area. Maybe you want it and you were interested in shorting. So I know one guy I follow in a particular room, he was short at 40.23.5, I think it was, which would make perfect sense in this case because it's not an SP long for the ride trade until you break up here. So the risk reward for his particular trade, and he wasn't basing it on the S&P long for the ride trade, but the risk reward on something like that, if you were interested in selling it, is really good. So you just exit it if it broke and officially made an S&P long for the ride upside. But those are the ways to use it, to look at them. Again, it was very helpful in this case to keep us out of a trade that is currently losing. Who knows what will happen the rest of the day, but it would not be an official trade until we break this. And if we do break this, before close, you'd want to watch for that, quick spike and then see if there's any follow through. But again, the best trades, especially the upside trades for the S&P along for the ride, they're going to confirm, preferably before 11, 12:30 maximum. Anything after that, you're usually, if you win, you're not going to win a great deal of points. So something to watch for. Have a great trading day. Take care.